It's all about numbers today. Hello and welcome to India Market Close. I'm Niraj Shah, and it's looking very, very strong for some companies and weak for some of the others. So, for example, I'll start off with the numbers on your screen. Welspun Living. You heard from Dipali Goenka and Davos as well about how strong they expect the story to look like. It's been mixed for textile companies by and large, but Welspun Living, it's not just a textile company, by the way, now that they are into home solutions, but there is a significant uptick that they've seen on revenues as well as margins. And I think as a result of that, Welspun Living, not Welspun Entertainment, but Welspun Living, which is 169 bucks, is up about 10% if I'm not wrong. So I think that's the key point. 11.5% now is Welspun. Let's change this stock, not Welspun End, but Welspun Living is the one I'm talking about. Very strong numbers, and the numbers are flashing on your screen. 74% uptick in EBITDA as well. Margins up 368 basis points. Strong showing, and the stock is duly reacting. So that is first. Then we have the pharma stocks, which are up and about. So Sun Pharma up about 3.5 to 4%. I think I've seen maybe Dr. Reddy's do reasonably okay as well. Piramal Pharma, which came out with a very good set of numbers, was also up and about. DRL is up about 4%, so strong show. Piramal Pharma up about 3.5%. So large, mid, small, that entire clutch of names, they have too done well in the session today. And what is sulking is stocks like L&T. So at the top of my head, I can think of Larsen & Toubro as being one stock that has been under pressure in the session today, has come off from the lows of the day, which is a good thing because, frankly, I mean, aside of a small margin miss, there weren't too many other negatives. And therefore, as has happened, each of the last 7 quarters, Larsen & Toubro has gained between two results. Could this time be different? Maybe, maybe not, but for now, seems to be looking okay. PB Fintech has given up some of the gains, but still up about 9%, so doing okay. Voltas about 7.5%, so that is doing okay. There is strength in Balaji Amines post-results, so that is doing okay. KPIT Tech about 5.5%, so that is doing okay as well. So these are a few stocks which to my mind look okay on the gaining side. On the losing side, on the index, of course, aside of Larsen & Toubro, there is Titan, which has come off a little bit in the session, so that is to be watched out for. But still, not too many losses. And on the broader end of the spectrum, Kalyan Jewellers, Metro Brand, Sham Metals, and Sterling Wilson Solar are 3 or 4 names that stand out in trade. It's a show which is going to be packed with management. So we'll be talking to PVR in a moment from now. We'll also be talking to, and we will also hear out the management of Ambuja in just moments from now as well. And later on in the show, we'll get in Anshu Malik of Dabur to talk about what's happening at that end of the spectrum too, post-Dabur numbers. So those are 3 names that you keenly need to watch out for. Do we have, I think we have a statement from Ambuja that we should try and play out and just give you a sense of what's happening there. So that is one thing to keep in mind. And then the questions to one PVR and secondly to Dabur would be what's happening or what is the sense around what customers are saying. So I think that is, there are some of the elements that we will keep in mind in the show today. Before we move further, the mid-cap stock of the day, to my mind, is KPIT Tech, simply because tech is not having a good rally per se. But KPIT Tech recorded net profit of 10.85% growth for the 3rd quarter. Sachin Tikekar, President and John MD of KPIT, spoke to me earlier today about the outlook for the next quarter and the quarters ahead. Listen in.
I have to say this has been another quarter that has been absolutely in line with our overall expectations. In terms of things that are in our control, I think things went as per the plan, whether it's on the engagement with the clients and the revenue side as well as the profits. I think they're a little bit more than what we thought, but in generally directionally in line. Of course, we have no control over the foreign exchange, and we just have to play it by the ear and see how it goes. Sometimes it works in favor, sometimes it doesn't. So what has happened, one change that has happened is our mix of business. Over the last couple of years, the growth in Europe has been extraordinary, and now there is growth in Japan. So Euro and Yen are playing a broader role in terms of our revenue mix. That's the only thing that I can say. But overall, we are happy that we have had consistent growth over the last 14 quarters. And the plan is to try and stay on top of it.
Okay, some more numbers on your screen. Heidelberg Cement, and look at those numbers again. Margins for Heidelberg up 392 basis points at 10.8% versus 6.9%. So that number is looking okay. Okay, we're showing this earnings impact plate, but I was just trying to read out the numbers, and I think the numbers just look rock solid, really. Automotive Axle is the other one which has actually come off because the net profit numbers are slightly lower. But Heidelberg, I thought, came out with a good set of numbers, both on the margins as well as on the bottom line front. Maybe the top line is a bit of a miss. Cement is looking a bit iffy today, I must say. Actually, speaking of cement numbers, Ambuja too has had a iffy afternoon, if you will, down about 2%. And after ACC's heroics, Ambuja, maybe the street was anticipating a lot more. Ajay Kapoor is talking about the Q3 earnings of Ambuja and what went by. Just let's listen in to what he has to say.
Results and performance of Ambuja Cements for Q3 FY24. Ambuja has achieved stellar financial results marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic market environment. The year-on-year consolidated performance for the quarter reflects a revenue increase by 2.8% of rupees 8,129 crores. The operating cost went down by 9.8% at rupees 4,526 per ton, a reduction of rupees 491 per ton. This is mainly on account of 21% decrease in energy costs driven by efficient fuel management. We achieved a 25% reduction in kiln fuel cost, now at 1 rupees 84 paisa per 1000 kcal, down from previous 2.45. With these improvements in revenue and cost, our EBITDA is rupees 1,732 crores, a jump of 70% YOY. The EBITDA per ton has increased by 65% to rupees 1,225, and margin expanded by 8.4 percentage points to rupees 21.3. We achieved 125% growth in profit after tax at rupees 1,090 crores, up from 488 crores, a jump of rupees 602 crores. Our consolidated cash and cash equivalent at the end of 31st December 23 remains at rupees 8,591 crores. This is post-acquisition of Sanghi Industries. Results on standalone basis reflect a net revenue rise of 7.5% at rupees 4,440 crores, in line with a 5.8% volume increment. The EBITDA grew by 33% at rupees 851 crores, with margins expanding by 3.7% to 19.3 from 15.5. EBITDA per ton grew by 26% to rupees 1,046. A strong PAT growth of 39% at rupees 514 crores. Coming to strategic investments and expansions, Adani's total cement capacity reached 77.4 million, fueled by the commissioning of the new Ametha grinding unit, a recent acquisition like Sanghi Industries and Asian Concretes and Cement Private Limited. We are capitalizing on our successful acquisition of Sanghi Industries, which is on a path of significant improvement in EBITDA performance post-acquisition. With the integration of 400 plus channel partners after the acquisition, our emphasis is on strengthening and reinforcing our iconic ACC and Ambuja brands through the positioning of Har Ghar Hoga aur Bhi Mazboot. With Asian Concrete, we will be able to strategically cater to a vast customer base across Himachal Pradesh, Haryana and Punjab, improving our profitability and market share. We are well on our path to ongoing growth in our brownfield operations, adding 8 million tons of clinker capacity at Bhattapara in Chhattisgarh and Maratha in Maharashtra. With these capacities coming into service, we will also enhance our ESG standards on the lines of 42 megawatts of waste heat, 30% AFR utilization, aided by green power for these new plants. This will allow 14 million tons of blended green cement new capacity by Q2 FY26. We have further approved 12 million ton cement grinding units at 5 locations. The 32 million ton additional cement capacity under implementation at various stages will take our total capacity to 110 million tons in the near future. Reaffirming our commitment to sustainable practices with an investment of rupees 6,000 crores in 1 gigawatt solar and wind power projects, we are aiming for a substantial increase in green power capacity, promising compelling economic advantages to our planned larger capacity of 140 million tons. We are also continuously increasing the share of alternate fuels and waste heat recovery systems. We will be reaching 186 megawatt waste heat capacity by FY25. In addition to our branding efforts, we have also robust and notable involvement with the technical and end user groups. Through our technical services, we are supporting ethical and environmentally friendly building practices, making a significant positive influence on society at large. While we have set out to achieve our long-term objectives, we are committed to sustainable growth with focus on water governance, sustainable livelihoods, women empowerment, uplifting rural infrastructure, and championing social inclusiveness. Cement demand in India will continue to grow at 7 to 8%, primarily fueled by investments in infrastructure and large-scale residential housing projects. This growth aligns strategically with the broader economic development goals of the country as we move from US $3.5 trillion to US $7.3 trillion economy by 2030. Looking ahead, we are optimistic about the future and are committed to sustaining this momentum. Ambuja Cements will continue to leverage its strength, explore new opportunities, and uphold the highest standards of corporate governance.
Right, that's Ambuja Cements and a statement from Ajay Kapoor about how the quarter went by. Now, just before we take that break, Bala has joined us. He's founder and chief market technician at Cashthechaos.com, and he catches the chaos as well, as he caught very well with Polycap some time back. He called it on the market some time back. Jay, I'm trying to figure out what is your view on the markets a day ahead of the budget. Are charts telling you something?
The charts is telling that, the banks are the weakest here, Niraj, and thanks for the introduction. And, the banks remain the weakest pocket for the markets and the weakest link. So the best thing to do right now is obviously avoid banks or be very careful about what you choose out there. The Nifty is a bit ambivalent, but I think, if the markets were to drop below 21,650 on an intraday basis, the momentum will pick up on the downside. But on a slightly higher time frame, it can be argued it's bullish and bearish. My opinion is that it's slightly the bearish side has a slight edge over the bullish side. So as long as the markets remain below 21,800, it's probably a sell-on rise on the market.
Okay. And, maybe we'll try and get Jay Bala sometime next week as well, post-budget is over, because FOMC plus budget could be a potent combination to determine the near-term course as well of the market. Jay, a bunch of managements lined up. So for the next 15-20 minutes, we might not be able to do justice to your intelligence, but we will do a full-fledged conversation in a few minutes from now. We need to slip into a quick break currently. When we come back, we talk to PVR, we talk to Dabur, we continue a conversation with Jay Bala, and we also get in Mehraboon Irani in the mix. Stay tuned.
watching India market close and markets looking in fine fettle just hours before the interim budget. Meanwhile, PVR numbers are out for the third quarter. Consolidated revenue year on year is up 64%. At 1545 crores versus 940 crores, so healthy bump up there. EBITDA numbers are looking in fine fettle, up 64% nearly at 472 crores. Margins at 30.55% versus 30.67%, so a bit of margin compression there. We'll talk about that with the management in just a second. And net profits are up about 20%. The hit or the pain point seems to be in movie production and distribution revenues, which have declined 48% year on year. Let me speak now with Sanjeev Kumar Bijli, Executive Director, and Gaurav Sharma, Senior Vice President, Corporate and Finance and Head IR at PVR INOX. Welcome, gentlemen. Thank you so much for speaking with us this afternoon at NDTV Profit. Let's go through the numbers first up. Mr. Bijli, may I start with you? EBITDA is looking healthy. What's contributed to it and why the pressure on margins?
You're right. Obviously the EBITDA is looking good. It's strong because of our higher ATP. We had an ATP of about 271 rupees this quarter, up by 13%. And even the F&B sales, or the SPH as we say, has been up by 11% at 132 rupees per person. So these two, and the advertising income also has kicked in, and that has also done well with about 140 crores we have clocked in this quarter. But the overall admissions have been slightly muted. And I think that is the reason why the margins are looking a little lower than we had hoped for. So I think that is the whole picture for Q3.
Just to understand that correctly, if you say overall admissions, are we saying that footfalls have come down a bit? Is that the concern?
The footfalls, yeah, are slightly lower than the Q3 of last year, primarily because the films didn't perform as well as we thought they would in October and November. On paper, of course, these films looked like blockbusters or great films, but they didn't perform as well. But December was a great month. We had 4 excellent big films, Animal, Salar, Tanki, and Sam Bahadur, which contributed to high footfalls.
And how far away from pre-pandemic occupancy levels, Mr. Bijli?
I would say that I think this coming financial year, once again, the lineup is looking very strong. It's not just the movie lineup, which is looking very strong, which is being contributed by all languages firing up, be it English, Hindi, and regional. I think one also has to be cognizant because of the lockdown and COVID. The movie production cycle also got disrupted, and therefore a lot of films got delayed in production and releasing, which I think this entire pipeline will settle in the coming financial year. Plus, we opened about 92 screens so far in the first 9 months, and we're opening another 70 screens in the last quarter. And these are all very strong, high-performing cinemas, concentrated and focused in markets where there's a high propensity to spend and watch movies, like South India, Pune, Mumbai, where people have a high propensity to spend. And these will obviously have a full year's operation. And the numbers from these cinemas, which will open up in this year, will contribute significantly to the admissions.
Mr. Gaurav Sharma, can you give us a sense of what is your contribution of F&B now to your revenues? And is it inching up, or are ticket sales still pulling most of the weight, considering they're up by about 11% year on year?
Yeah, no, F&B sales does contribute a significant portion of our revenues. In fact, in the first 9 months of this financial year, F&B has contributed roughly about 30% of our total sales. And this has been inching up year on year, as Mr. Kumar mentioned. The spending per head on F&B by consumers has gone up considerably. Year on year, we have seen almost a 10% increase in SPH. And when you compare it with pre-pandemic, the increase in F&B spending has been substantial.
Okay. Give us a sense about what's happening on the OTT side of things. Is there a hesitation about buying digital rights of movies? This question again for Mr. Sharma. And how does that play out and impact you?
Well, from the OTT standpoint, I think what we understand is that OTTs are definitely being selective in terms of the content that they're buying. Theatrical is continuing to be a preferred medium for release of films, and only when films do well theatrically, I think streaming platforms at that point in time decide whether to buy and at what price to buy. So I think from that perspective, theaters continue to be the preferred option for release of content by producers, and also consuming content by consumers is what we are seeing.
Gaurav, sorry, did I hear you say that the spending per head has gone up 10% because the data seemed to suggest it stayed flat, 133 or thereabouts, YOY?
No, last year, compared to last year, it has gone up. It was about 122 in quarter 3 of last year. It is 131 in quarter 3 of this year.
Okay, so but quarter on quarter it may have stayed flat. You expect this trend to inch up a little bit as the calendar goes by any chance? Is there something like that can be estimated?
Yeah, definitely. I think as movies continue to perform well at the cinemas, people will start coming back. We have a very strong pipeline. When they visit cinemas, what we are seeing is that they are not hesitating to spend on F&B. So our belief is that this momentum of F&B spending, the growth that we have seen this year will continue going forward as well.
All right. Just one last forward-looking point, Mr. Bijli. Like you mentioned, in this quarter, maybe December had 4 blockbusters, but overall, the movies didn't perform as was expected or didn't draw audiences as expected. What is the lineup looking like for Q4 and going ahead? What do you expect to close the year at?
The content lineup for the next 2 months, of course, Jain is almost over, and Fighter was a big film that came out on the 26th of January that is still doing brisk numbers. In addition to that, we have a few very strong Hindi films releasing in the month of February itself, one is with Shahid Kapoor. There is a film with Ajay Devgan. There is a couple of regional strong films and even Hollywood films. So it's looking very strong, the outlook of films. Plus, as I said, we're opening some of our megaplexes in this quarter as well, a 14-screen complex in Bangalore and 14-screen complex in Pune and a 9-screen complex in Ahmedabad. And all these large format, large megaplexes contribute substantially to the footfalls when we open, because there are destination malls, and fueled by an exciting lineup of films, the admissions are looking pretty healthy for this quarter as well.
All right. So we'll wait and see how many people go to the movies. Clearly, people are still going to the movies despite this OTT scare. So alive and kicking there. Thank you so much, Sanjeev, Bijli and Gaurav Sharma, for speaking to us. The team at PVR talking about their Q3 numbers. All right, Mehraboon, Irani in the house, in our studios today. Mehraboon, great to have you here.
Hi.
Before the budget, before the FOMC, what's going to matter more tomorrow? Who's going to matter, Mr. Powell or Mrs. Nirmala Sitharaman?
Well, I would say that it's a vote on account ultimately, and I think the expectations are much more than what possibly will be spelled out tomorrow. It's an interim budget, so we are going to have a proper budget in the month of June.
But in 2019, the interim budget was the proper budget.
Yeah, and there were some concessions given to the salaried class or the middle class, I think a standard deduction, which Mr. Piyush Goyal announced.
PM Kisan Nidhi scheme was announced in 2019.
Is that going to have an impact on the market?
Correct.
So I think there will be some social schemes announced. I am quite sure that there will be some thrust being given to some Jal Vikas, that is the water schemes. There will be possibly some layout being spelled for things like infrastructure, railways. Will it be the same amount? All those things beyond the point will not matter. That's my view. Coming back to your question as far as Powell goes, I think somewhere the consensus is coming slowly that we are not going to have a rate cut happening till June, July, August. And I think in my last visit over here, I think on the very first day when you launched this channel, I had mentioned, and I have not changed my view, that somewhere we will have an election verdict which the markets will like. We will have a Powell reducing rates somewhere in June, July, and hopefully, which is not in my hands, not in your hands, that the monsoon prediction will be better than what we had last year. A combination of these three factors, I promise you, this is my gut feeling, and I have a right to go wrong. we will have an explosive high as far as the markets goes, and people will just go on refusing to believe it. Now, after that, what? Let's not discuss it right now.
Fair point, because then the situation might change as well. So fair point completely. Okay, we'll talk to Mehraboon Irani about some of the individual movers as well. But Jai Bala has been with us, and Jai, like I said, a few earnings, so had to bear with that. You've given us a sense of you believe that in the near term, maybe, just maybe, the downsides might have a slightly more weightage than the upside. Within that landscape, Jai, and banks are weak is what you said, but within this landscape, are there individual themes or stocks that stand out for you?
Yeah, I think as a theme, real estate is still probably not talked out, but that could be due to the weightage of DLF and DLF. The rest of the pack like Oberoi, they and others, like Gojal Properties, they could be lagging DLF. Even autos as a theme, they might still be doing okay, but overall an extreme amount of caution is required because even if there were to be new high, which is a very low probability, new high, when I say new high, new all-time high, it's a very low probability, and even if it were to make, the market's not going to sustain. That's the theme I'm working with. And when it comes to US 10-year yields, I had said in December, I'm not sure if it's for your channel, and I said there's a January surprise due for the rates, and Fed is likely to backpedal when it comes to rate cuts. Already, the future Fed fund rates futures have dropped back, and as Mehraboon pointed out, a lot of factors are pointing to a delayed rate cut, if not no rate cuts. That's what is going to happen. We're going to have a big surprise when it comes to US 10-year rates. We're going to have higher rates, probably much above the 500 basis points we saw last year.
Okay, well, surprise, surprise, HDFC Bank on a number of days now is supporting the markets in the green, which is a good thing. Let's take a slip into a quick break, come back and continue our conversation with our guests.
Reception downstairs.
welcome back. We're just about 25 odd minutes away from close on a day that is looking very, very excited about the vote on account. What's happening on an expiry day? Agam is standing by with all the details. Agam, fine fettle today on the Bank Nifty.
Yes, absolutely. So what's really happened through the course of the day is some amount of strength returning to the markets, but there's still caution. Of course, we don't necessarily mean that there is going to be a lot of traction, but we're seeing a little bit of an increase in open interest towards longs at the moment, at least as far as the Nifty is concerned, considering the underlying has advanced by around 0.9%. The Bank Nifty, on the other hand, showing a lot more strength. In fact, up 1.4%, largely on account of HDFC Bank, Axis Bank and ICICI Bank. And because of that, because we've seen so much volatility in the Bank Nifty, there's also more short covering coming through, indicated by a decline in open interest. As far as the Nifty options market goes, in today's day of trade, well, traders did take that as an opportunity to perhaps go and create positions around the 21,600 mark, as you can see on your screen there. In terms of your overall distribution, let's pull that plate up as well. And that's where you are still seeing a lot more resistance building around 21,700, 21,800, even though we are teasing those levels at the moment. Of course, as far as the Bank Nifty is concerned, and it is the weekly options expiry, do remember in the morning, I had pointed out that 45,500 would be the pivot. Not only has the Bank Nifty moved above that mark, but it's also now likely to close somewhere around the 46,000 mark right here. In terms of stocks, again, we are keeping an eye on longs building up in Voltas and Dr. Reddy's. Both of them, of course, for Voltas on account of earnings, Dr. Reddy's on account of that, one of the drugs and positive development there. And on the other hand, shorts building up in L&T and Siemens. And of course, in terms of those stocks we saw unwinding in trade, we're looking at about a short covering for Exide, PNB, Atul, AU Small Finance, as well as Federal Bank. We'll be watching out for a whole host of these counters, but as far as the benchmarks are concerned, for now, they're trending positively ahead of the union budget.
All right, so positive cues there on the union budget coming in. Now let's look at what's working today, and the story of the day is no doubt healthcare. The Nifty Healthcare Index up about 3%. Some cracker numbers have come out. DRL, let's look at Sun Pharma. Very exciting stuff there. Even Piramal Pharma has been doing very, very well. Mehraboon and Jay with us on the show. And, let me quickly first go across to Jay and get his take on some of these counters that we've been talking about. Jay, is this a defensive play we're seeing? Is there anything that you think is worth acquiring at these levels in the healthcare pharma space?
See, the healthcare sector has been my favorite since October of this year, and it's been outperforming even my expectations. And my expectation was about, from 14,500, I expected the index to touch about 17,100 to 17,500. It's right now at 17,900. So, and I'm talking about Nifty Pharma Index. So, but it does look like, it's still not done, but it's looking like it's close to exhaustion. But within the pharma space, I like Torrent, Lupin, and Aurobindo and Glenmark, and rather than, Cipla and Dr. Reddy's. But it could be that Reddy and Cipla may be at the nascent stage of their move. But looking at the overall index, it does look like, we are very close to an important top for pharma index. Probably should start unloading the profits that you've made so far, because the objective I see, the next level is about 18,400. So not too much of upside from here, but it's still bullish and the top performing sector.
But the individual names are doing very well, select few of them. Mehraboon, anything out there in the pharma pack? Because sporadically the numbers this earnings season have not looked bad.
After 6 years of being negative on this sector and being negative on the frontline stock in the sector called Sun Pharma, I have turned positive as far as Sun Pharma goes.
Sun Pharma,
yeah.
Okay.
The balance sheet is good. Domestic business, I think there is no parallel if you ask me. They are increasing the sales force. They have got decent cash in the books, and with Taro now coming under his fold, there will be further cash, in which I'm quite sure they will make some more acquisitions. I have not seen these numbers which have been announced right now closely, but I personally believe that Sun Pharma among frontline stocks should be the best bet going ahead. As far as individual names goes, I like names like a JB Chemicals, I like names like an FDC, I like names like a Kaplan Point Labs. But this is the space which I was negative. I know from industry sources whom I know as friends that possibly the worst for the sector is over. But does it mean that you go ahead and buy? You are buying it only because the market, and knowing that things are not very good for the sector, has brought down prices to levels from where the downside may not be much. So you go and buy it as an opportunist, you make some money, but are there any positive triggers? Honestly, not too many. The worst could be over, but not many positive triggers right now. So from the price angle, you are going to make some money in the short run, which is what is happening over the last 2 months. But as far as individual stocks goes, I think you need to make your study. My personal bet, which I mentioned, with clear disclosure, I'm holding those 4 stocks.
Yeah, what about DRL, Mehraboon? Any thoughts on DRL? It's been buzzing today. Numbers have beaten expectations on the face of it, at least. And has anything fundamentally changed for the sector, or are they just playing catch up?
I think, as I mentioned earlier, I think the worst for the sector as far as the developed markets goes, companies which had an exposure in developed markets, especially an economy like US, I think the worst possibly for them is behind them. Are things going to improve overnight? Answer is clear no. Clear no. But then the point is the market, anticipating these problems, had discounted the prices to levels from where the downside looks capped. As far as DRL goes, the numbers look interesting, the numbers look good, but at the price at which it is, I honestly would stick my neck out and say I don't see more than 5% from here on the upside.
Okay. Well, that's as far as pharma goes. By the way, some more numbers trickling in. We've already spoken about Wellspun Living, which had a fabulous set of numbers, and that stock was doing well. I think Jubilant FoodWorks numbers are not looking all that great, and a weak set of numbers came in for Piramal Enterprises as well. That stock saw profit converted to a loss, or rather a corresponding loss in this quarter. NPS may have improved marginally. Vishwanath Nair, my colleague, caught up with Jairam Sridharan, Managing Director of Piramal Finance. Listen in.
On December 19th, RBI had come out with a circular that said that any financial institution that has exposure to alternative investment funds, if you also happen to have exposure to one of the underlying clients of the AIF, then you should go ahead and make provisions. We had made a stock exchange exposure in AIFs. That's what we have dealt with during the course of the quarter. We had 3,500 crores of total exposure into AIFs. Of that, about 1,700 crores was linked to some sort of assets or accounts where we had exposure. We had a lot of debate internally, but then we decided eventually to write down the entire 3,500 crores just to be very safe and fully compliant. So we've gone ahead and taken a full 3,500 crore write down on our AIF portfolio, and that on a post-tax basis has resulted in about 2,700 crores of hit. That 2,700 crores, against that we have roughly 300 crores of regular profits, which is what gets netted off, and you end up with roughly 2,400 crores of reported losses that you mentioned in your opening remarks. So that's broadly what has happened. These AIFs, the 3,400 crores worth of write-downs that we have taken, good quality assets. Cash flow has been coming in from these assets. And so the accounting action that we have taken now of taking full provisions doesn't change the economic value of these assets at all. The economic value continues to be what it was before we did the action. We have already received 1,100 crores of cash flow from these assets in the prior periods. Just in this financial year, in the last 3 quarters, we have received 700 crores of cash flow from these AIF instruments. We expect that to continue in the quarters ahead as well. And now that we have written down that entire exposure to zero, all the future cash flows that come in from those AIF instruments will accrue to us directly through P&L. And we do expect almost all of that AIF investment to be recouped over the next 2 years.
That's the word coming in from Piramal Enterprises, but it's a day of numbers today, and automaker Maruti, the big one, came out with their December quarter earnings. Revenue and net profit have jumped. Margins have expanded. Vinay is joining us to give us the qualitative analysis of the numbers. Vinay, what are the highlights?
Yeah, so Maruti Suzuki's profit beat estimates with a 30% rise due to higher sales and increased share of SUVs. Sales rose 7.6% to 5.01 lakh units in the quarter. And within those sales, if you see, the utility vehicle sales rose 60%, 1.5 lakh units. So you can see that clearly the utility vehicle shares have risen in the overall sales, and it is clearly benefiting the company. And if you look at a combination of higher volumes and rise in average ticket prices has also aided the company's performance in the quarter. Revenue rose 15% in the quarter, and that is also driven by the SUV sales, and margin expanded to 11.7% compared with 9.7% like last year. So this margin expansion has been aided by lower commodity costs. And if you look at the highest ever quarterly exports, that has also aided the margins of the company. If you look at the lower commodity cost, how they have impacted the company's financials, the material cost as a percentage of sales fell 170 basis points to 74%. So that is how the companies have fared in the quarter, and a much better looking future for the Maruti Suzuki company.
Vinay, thanks for that. Well, so, auto and auto-linked stocks haven't looked too bad. Mehraboon, did you get a chance to look at the Maruti numbers carefully? And if not, anything else in auto that has stood out for you in this quarter?
I would say that I would prefer some of the other names, not the frontline names. I think that as far as the two-wheelers goes, I said last time also, I ultimately see a Bajaj Auto going to 10,000. If you are an investor, as far as the other names goes, the four-wheelers, I've always liked Tata Motors.
What's happening
at this price?
No, but what's happening? What's happening in Tata Motors? Come on, tell me.
A lot of things outside the domestic sales and whatever you were talking for the last 2 years are happening. The company has ventured out, is becoming a leader, and quite a few new things which ultimately is going to come out. Now, a lot of things are out of sheer perception. This will happen, this will happen, this will happen. So at 900 rupees, while I'll continue to hold on to Tata Motors, I'm not going to recommend it afresh. I would go with names like a Force Motors. I would like to go with a name like an Auto Corporation of Goa, which ultimately is directly and indirectly a Tata Group company. I will go with those names because I find them valuation was cheap. I think, Niraj, we need to accept one thing. While I'm saying we are going to see an explosive new high, there are quite a few pockets where I feel they're grossly overvalued.
Yeah, sure.
And a pullback is going to cause a hurt to a lot of people. People are just refusing to sell. People are not knowing the valuations that they are paying. So as far as auto names goes, I feel for the time being, they are all fully valued. Most of them.
I have a quick follow-up. We're talking about auto names or auto-linked names which are seeing higher valuations than seeing selling. KPIT Tech saw that selling. It's an auto ERD company, and hence I'm asking you. Post these numbers, 2 days on a trot now. The stock has recovered all of that lost ground and more. What do you track that at all?
I don't track it off late, but I have met the management in the past, and I believe and I have very high rating for them. So I would say that any sharp pullback which happens in the stock, you can go and buy it, because the management somewhere, I would give them a very high grade as far as my ranking for them goes. But I'm not tracking the stock off late, so not very fair on my part to comment beyond a point.
Okay. Jay, Bala, autos, Maruti higher, Tata Motors higher, some of the auto-linked names like KPIT Tech higher. Are any of the charts looking attractive?
Yeah, definitely. KPIT is definitely looking attractive. The high it saw in December, it's like an incomplete structure for me. And, probably further higher highs due. Probably all-time highs too, somewhere in the region of 1,800 to 2,000 probably. Obviously, it's a volatile stock. And even I've been saying for several months now, I prefer two-wheelers within the auto space rather than the four-wheelers. And I've been bullish on Bajaj and TVS Motors. And of course, within the four-wheeler space, Tata Motors is doing much better than Maruti or Mahindra and Mahindra. So, if you got to be there, obviously the ranking is Tata Motors and rest of the pack out there. So that's my pecking order for the moment. And did I miss any other stock in this space?
No. I mean, I think you kind of gave me my answer, Jay, that I was looking for. So it's good to get that feel of what's happening across that pocket. Now, let's try and talk about Dabur and the numbers that came out. Ankush Jain, CFO of the company, Johnson right now to talk about the quarter and the outlook ahead. Ankush, good having you. Thanks for taking the time out and speaking to us. How do you characterize what's happened in the quarter, and is there a turn of events? Because we are hearing fairly divergent trends around the pain in the rural market versus the infra push by the government leading to higher spending possibilities from the rural market because the bank account balances are strong. So you guys are the exact pulse, or know the exact pulse of what's happening in the market. So tell us what happened in the quarter gone by. How do you expect the quarter which is currently on to go like?
Yeah. Thanks, and first of all, good afternoon to you and all your viewers.
Very good afternoon.
And thanks for having me here. Just to start with on our overall quarterly results. While the quarter has seen amidst the challenging environment, where you see the contraction in demand and etc., but our revenue has grown by 7% and almost 9.6% in constant currency, which is leading industry growth, which is also coupled with gain in market shares and also increasing in our route to market, increase in villages, etc. So we are pretty confident that with this growth and gain in market share, our momentum continues, and the strategy of our power brand to power strategy, our route to market, increase in villages, outlet coverage, salesman efficiency, etc., is working pretty fine. And this was pretty broad-based growth, with international business also growing by 14%, India volume growth by 4%, which was one of the highest in the industry. And on top of it, our operating margins also expanded 50 bits, and on a like-to-like basis by almost 120 bits, because there was a one-off or an abnormal cost in the base in the current year. Having said that, we continue to gain market shares, in almost 95% of our categories, where you take highly competitive categories like hair oils, where we gained 140 bits, juices and nectars almost 20 bits. Chyawanprash, though there has been a stress in consumption, but we still gained 151 bits market share. Mosquito repellents almost 1,000 bits. So it's backed by good fundamental growth, which means the brand equity is resonating with the consumers, and there is attraction of our brands, even amidst this challenging, stressful environment. Now, the second part of the query was how do you look forward in Q4, which is the current quarter. While we expect a similar momentum to grow, and we are still, waiting for summers to kick in, because most of our beverage season, sales will start happening by end of this quarter. Likewise, we are also pretty hopeful at this point of time as I speak. The winters were delayed, so there's some bit of traction on our even winter portfolio, though the results are yet to be seen from the market syndicated data. But I think we will continue with our growth momentum the way we have been doing. And on a YTD basis, our growth is close to 8%. On a third part of the query in terms of how is it divergent to the industry? Yes, even we have been noticing that our growth indicators are pretty divergent to what has been a commentary by some of the other players. While we see that rural is still lagging, and it is almost 10 or 11 quarters in a row where rural growth for the industry as a large is lagging urban. However, the point is that the delta between the two growth rates is merging or converging. Earlier, it used to be as high as 500 to 600 bits lower growth in rural. Now the growth is lower by only 200 bits. Having said that, for us it is exactly the contrary. For us, the growth in rural is almost 200 bits higher than urban in the current quarter, and there are valid reasons for that. As I said earlier, because of our operating margin expansion and because of deflation, our gross margin expansion, we have been investing ahead of the curve, not only in power, in brand building, but also in our route to market. So we have increased our village coverage. We have increased our, village level entrepreneurs. we have increased our distribution footprint. So that's giving positive results. Yeah.
Got it. Ankush, I'm just trying to understand, based on the trends that you would have seen in the quarter, maybe some spillover effect, maybe the trends in the first month of the current calendar, how do you think Q4 shapes up? And how do you think overall as a year you could end with? Simply because, meeting expectations is one thing. Is there a possibility by any chance that you could even beat what or expectations or estimates that you would have started off with?
Yeah. So while I said, our growth momentum will continue in a similar range as we have done in quarter 3 and also at a 9-month level. It's pretty early at this point of time to comment on the exact numbers of Q4.
No, I don't want exact numbers, Ankush. I'm just trying to get a flavor. Yeah. Please appreciate. I'm not wanting exact numbers. Understand you can't give me.
Yeah. So I think it'll be a similar range to what we have done so far in 9 months and also in quarter. They're almost similar. So we are I think hopeful of at least meeting these numbers with the trend. However, having said that, just of late we have seen some liquidity pressure also in the market. So we are still evaluating and let's see. And we are hopeful of that. Yeah.
Okay.
Ankush, hi, Tamanna here. Just a couple of questions. I'm interested in what you're saying about your rural growth outpacing your urban and the gap also closing industry-wise. What is your forecast for rural growth and rural consumption? How do you see that panning out?
Yeah. While I've always been optimistic of rural because the per capita consumption in rural industry is the least compared to urban. We thought it will overtake urban. We thought it a quarter or so earlier, but it has been somehow prolonged or delayed. Maybe a couple of reasons. The lag impact of the capital expenditure of the government is yet to be seen. But I think while we are certain that the growth momentum should accelerate or be at least in line with urban, it's only a matter of timing, whether 2 months from now or 3 months from now. Once also, with the election year and elections now around the corner, I think a lot of spending power will go into rural, plus the lag impact of the capital expenditure, which will also get into. So it's only a matter of time. I can't say with certainty, 2 months or 2 quarters, but on a mid to long term horizon, we certainly feel that rural should outpace, given for every category, it is very under indexed to urban. And the aspirations of rural consumers are definitely increasing. And also now, with more of modern trade and e-com channels, accessibility going to rural, that should also give a very flip in the mid to long term. Yeah.
Yeah, one last question, Ankush, because I'm speaking with you on the eve of the interim budget, and we're talking about push to rural consumption. What do you expect or hope to see in this direction?
Yeah. Hope to see in the election or what?
The budget tomorrow, interim budget.
Tomorrow's budget, yeah.
Yeah.
So while, it's a vote on account budget, but while we see that the government will continue its impetus and momentum on the capital expenditure, increased outlay towards that, more infrastructure, because there is a direct multiplier impact on the consumption. It increases more jobs, employment, puts more money in the hands of consumers, especially rural. So I'm sure, with the current government focus on infrastructure development, it should be positive and they will continue this. Yeah.
Ankush, much appreciate you joining in. All the best with some of the market share gains that you've had in the portfolios as well, and keep up with the margin show. Thanks for taking the time out. Looking forward to talk to you again soon.
Yeah. Thank you so much.
All right. Just about markets ending, so we couldn't get in those details out, but it's 5 minutes left for the markets to shut shop. And if we just look at what they have done, while one can't say that we've reversed the losses of yesterday, but I think at 0.88% for the Sensex or for the Nifty, you have to admit that this turned out into a fine session of trade ahead of the budget. Yesterday, the markets did the unexpected. Today, quite stunning, the kind of gains that we've had in the large caps as well. Mehraboon, a lot of people believe that if you get HDFC Bank at the levels that you're getting at the valuations that you're getting at, it's a steal. Do you think so?
Absolutely no complaints with the numbers, and I find it very amusing when people say the numbers are not very good. We have to understand that it's going to take at least 2 to 3 more quarters for things to settle down as far as the merger goes. So, as far as I know, there's nothing wrong with the bank. It's doing very well. Numbers will be good. It's only that the loan book of HDFC got transferred to HDFC Bank, and we all know that the loans, home loans, are always at a lower rate as compared to, say, a consumer loans. So that is where some margin hit happens. Point number 2 is where the loans get transferred, you have credit deposit ratio becoming 110%. It will take its own time to play out, maybe a couple of quarters more. Now, as far as the stock goes, yes, if I'm going to look at things for the next 2-3 years, I'm going to earn money. Maybe over the next 1 year, I will earn money. But in the meantime, it is distinctly possible the stock may shed another 5, 7, 8, 10%. I'm not ruling it out in the shorter term. But where is the hurry to buy into it right now when there are better opportunities relatively in the PSU bank space? That's the way I would put it. So HDFC Bank, I'm holding it. I know that it's not going to do anything for me, but it's such a great bank. I'm not in a hurry to sell because I've got other things in my portfolio which is possibly taking care of the loss I'm suffering in HDFC Bank right now. But if you are asking me that should I buy the stock for the next 1, 2, 3, 4, 5 months, my answer would be no. Wait for some more time. I think next 2 quarters, things should play itself better for HDFC Bank. In terms of operating performance, I don't see any problem.
All right, Mehraboon, great to have you in the studios.
Thanks a lot.
We have just about 3 minutes to closing. I'm going to take a quick last call from Jain on BTST. Is there a long list or no list right now, Jain, till you decide what's going to happen tomorrow?
Yeah, there is opportunity out there, but as I said, I've been bullish on the real estate sector. So DLF can be a BTST, but the stock has to be pretty tight. Or if you can afford to hold on for a little bit longer, like more than just one session, probably more opportunity there for price objective close to 860 to 875. So positive on DLF, and trend is I'm negative there. It's an STBT there. I need to put a stop at about 30, not a STBT, more like a positional chart. It's got a stellar run since 2020, 2021. I think that's coming to an end. Although it's up for the longer term, we could see extreme short-term correction there, somewhere close to 2,700.
Wow. Okay, that's a steep one. Jai Bala, maybe the next time that we speak, let's see what's happened to trend, because you are called polycap so well. Let's just see how this one behaves. But thanks for your time today. Mehraboon, Irani, thanks for your time today. Sorry we were not able to do justice, but a quick market wrap. We haven't even discussed stocks like Jain Technologies, which has been on an upper circuit for 3 consecutive days. And that's the power of good earnings. And we've seen some bit of example today with Welspun and some of the others. But, okay, thanks for that. Let's first get the heat map up, because the Nifty and the Sensex we know are doing well. Let's see what's aiding this move in the session today. Dr. Reddy's 4.5% out of nowhere. We're talking about autos doing well. Look at Eicher. Look at Mahindra and Mahindra. Look at Maruti. I think that whole bucket, Tata Motors, that whole bucket. So it's a day that belongs to pharmaceuticals and autos. Very unlikely for these to have a common trend, but that's what we're seeing in the session today. Look at pharma. Reddy's, Sun Pharma, Divi's, Cipla. It's a really strong show. The Adani Twins, Enterprises and Ports are doing well. There is some bit of strength in Ultra Tech as well. So Ambuja's issues for the quarter, and the stock is down today, has not impacted some of the other cement names. And just 3 losers, the principal one being Larsen and Toubro, down in the session today. So that's the long and short of what's happened in the large cap end of the market. We are almost done. Just quick advanced decline ratio check to just show you what happened at the broader end of the spectrum today and how we stayed good for a better part of the day. And you can argue that it's come off a little bit from where it started off maybe, or where it was at the first 1 hour, but it's not a bad advanced decline ratio, and I think the markets will take it with both hands. From Tamanna and me and the team that put this show together, thank you so much for watching. We'll be back tomorrow with all the budget conversations from 8 a.m. till 4 p.m. We'll be with you, telling you in the most simple language with the best of guests about what to do ahead of the budget. What is the budget statement looking like? And we'll analyze that with the best experts post the budget statement as well.